Market picture now, and stocks in Asia traded higher today, and a lot of that was amid the positive developments on the US-China trade front. Mainland Chinese stocks edged up in midday trade. US President Donald Trump even saying in a tweet that he is set to meet with China's vice premier today, raising expectations that progress could indeed be made on the trade front by the two economic powerhouses. The US is said to have been considering an agreement to suspend next week's tariff increase in exchange for a currency pact. The US previously announced that it would increase duties on $250 billion worth of Chinese goods. That's from 25% right through to 30% on October 15. Now, a 15% tariff on an additional $160 billion worth of Chinese imports is also expected to kick in on December 15. This has positively impacted market pictures across Asia, with the Shanghai Composite up 0.9%, sitting at 2,973 points. The Hang Seng itself also picking up 2.5%, the biggest gainer today, 26,321. The Nikkei as well, just below that 22,000 point mark. That's up 1.2%. Overall, on the United States front, well, Wall Street rose last night. A lot of that on hopes that the top-level US-China trade talks would yield at least some sort of partial deal, while a rise in Apple's shares also boosted the market. Now, the Dow Jones Industrial Average rose 0.5%, 26,500 points there. The S&P 500 gaining 2/3% to close out the day at 2,938. The Nasdaq Composite adding 0.6%. Closing at 7,950 points. Let's turn our attention over now to how things have fared out in Europe. Of course, a lot of the attention will continue to be braced around that China-US trade negotiation and exactly how things fare there. It seems to have been a positive day one. We await day two, of course, where it seems that more of a currency pact will be made by the two nations. Perhaps we're headed in a positive direction. Of course, the impeachment proceedings against President Donald Trump will certainly add some fight and bite to the market. But for now, we're seeing some positivity even on the local front. But in Europe, across the board, we're seeing some green there, so some positive sentiment coming through on that front. So all the markets then, the main bourse is headed in a positive direction. More than 1% gained as well then for the JSE All Share. So a positive number there at 55,661. A good gain for the industrials. But the biggest gainers today, just around 2.5% of the financials as they head towards that 40,000 point mark. On the resource share front, well, these are also boding very well then, considering the state of the rand also, while commodities seem to have been headed in a better direction as well. The resource shares sitting at 45,258 points then for the index, and platinum also sitting above that 50-point mark. And over to the resources themselves, well, perhaps not so much of a good day for gold, as the demand seems to tear away from it, as of course investors are more willing to get into riskier assets, leaving safe havens like gold out of their investment pool for today, that is. So just below that 1,500 mark is where gold sits. 903 for platinum, while Brent crude is headed higher, but still sits just below the $60 a barrel mark. Over into the local currency, a more than 1% tick higher for the local currency then. 14.92 now against the US dollar. Whether it stays at this mark, though, will be quite important and quite critical. It will depend as well as we head to, of course, October, where we see the midterm budget policy statement, which is expected at the end of this month. And then the very next day, November the 1st, or 2 days later, should I say, we then, of course, expect Moody's to come out with a decision regarding South Africa's currency rating, whether the foreign currency or local currency denominated debt will certainly be still stable above that non-investment grade level, or whether it dips. 18.75 for a pound, 16.45 then for a euro. Well, that is the state of the market for now, and we'll continue to unpack it, right? Because a whole lot of data has certainly come out. It seems that there's a flat stance then as well when it comes to inflation out of the United States, and that continues to play a role then in exactly how things fare. But nothing will take away from, of course, the China-US trade talks. So let's chat to Warwick Lucas now from Galileo Capital as we unpack that market picture. Warwick, thank you so much for the time. A positive day one. Does this bode well? Does this give you perhaps some sense of this can actually end up in some positive end?
Well, I certainly think that expectations have been reset positively, and of course the Chinese have sent a very broad, well-rounded team there. So that's positive. I think the fact that they're talking about a partial deal is also positive, because I think now they're taking the view of, well, okay, we are still very wide apart in many areas. But how do you eat an elephant? Well, one bite at a time.
Exactly.
And by at least saying, well, let's try and get something partial out, I think is really now much better setting themselves up for success than previous rounds of the talk. So I'm moderately positive.
Yeah, in giving a sense of positivity, which seems to have come from both the US and from China's side, day two comes now, of course, and even today, what's worse is that President Donald Trump will meet with Liu He, who is the vice premier of China. Then it seems then that they're willing to give quite a few concessions, whether it be just on the currency front, whether it be on the technological front in some aspects. Does this perhaps say to the markets that we are reaching a point now where some stability could be reached very soon, or is this perhaps a little too preemptive?
Probably too preemptive at this stage, but at least it gives the point that they can find some islands of stability. I think the earlier Chinese position was that they really struggled to understand Trump, found it difficult to do a deal with him, but I think they started to realize that this is who they have to deal with. And any potential change of government, a Democratic contender could actually be a harder entity to deal with. I mean, Elizabeth Warren could be an extremely difficult negotiating partner because she's much more likely to bring in touchy-feely or soft political issues into the negotiation. At the end of the day, this needs to be a hard-nosed, interest-driven discussion.
Yeah. This week we also then saw, if we head on over to the oil market, we saw the likes of Ecuador having unrest. That hurt in terms of some oil production not being able to come out. But then we also saw, of course, Saudi Arabia then saying to themselves, well, we lost about 660,000 barrels per day during the drone attack that saw their energy facilities down for a bit. Are we worried, though, that the oil price may be dipping just a little too quickly? I mean, now still below that $60 a barrel mark, around $58 a barrel or so. Is there some sense of stability just remaining a touch below 60?
I think the key issue with the oil market is it's generally quite a clean indicator of what the state of the global economy is. Now, I mean, the global economy is still moving along positively, but it's just not as robust as it has been in the last few years. There's not the same sort of sense of powering along, and this substantially does relate at the margin to these trade talks. So I think if we see a resolution in trade talks, I mean, that would firm that up, and clearly some other positive economic data would do so as well.
Yeah, certainly would definitely help there. Let's come on to the local front then. By way of equity news, we saw Cell C, one of course, Blue Label Telecoms, struggling and really marking that down to zero in terms of their investment with Cell C. Cell C now deciding to sell core parts of their business. Things are getting worse and worse there for Cell C by the seams of things.
Okay, so Cell C's a bit of an interesting and a little bit tough position, but in Greek mythology there was this analogy of a guy who was trapped by his feet, and every time he tried to eat a piece of fruit on an apple tree, the wind blew it up and he couldn't quite reach it. And Cell C, in terms of volume, because cellular telecommunication is a volume game, you lay out your infrastructure and you need millions and millions of calls to go through, and Cell C's always been in the position that just as they were almost there, pricing pressures on the market kept them in the box. So I think the situation is that Cell C really just needs that bit extra volume that really then give them the traction that they really need. So Cell C, I think, needs to do some kind of a deal that's going to give them just that bit extra that allows them to get sustainable profitability, and that's the challenge there, to not just be a number three, but a big, strong number three that has traffic.
Still a viable business, though, you think?
I suspect it is. I would hope to see a deal possibly with Telkom. I mean, that's, otherwise you're going to have competition issues if you deal with number 1 or 2.
Yeah.
But maybe even the competition authorities would see past that. So let's see.
We'll see. Okay, very quickly, we close off then with just a quick look at the currency. 14.90, 14.92 odd against the US dollar. Seems like a positive end to the week. Is it all trade talk linked though?
A little bit of trade and a little bit of business confidence. And I think between those two, you've probably wrapped it up.
Yeah, fantastic. Warwick, thank you so much for the time. Really appreciate it. Warwick Lucas from Galileo Capital helping us unpack the market picture here on a Friday.